In this video, we will go over a cash budget that is formatted more similarly to how you might see that on the exam. This is a bonus problem. You can turn it in for bonus points on Blackboard. Okay, so use the following info to determine the ending cash balance. Basically, determine everything that you're being asked here for a December 31st cash budget. So you are given a block of info. Some of it's relevant, some of it might not be. The first thing that I would start with, you're asked first for preliminary cash balance, is I would go through here and mark what and how each of these are relevant. Beginning cash balance. So to get the preliminary balance, you're always going to take your beginning cash balance plus any cash receipts. If I receive cash, it causes cash to go up, minus any cash payments. Note that these are cash items. If it is not a cash item, it does not belong in the cash budget. So keep that in mind. Beginning cash balance, it's positive. That gets included in my calculation of the prelim balance, so I include that. Cash receipts, so if I receive cash, that increases cash. I add that. Budgeted cash payments for purchases. So it says payments. Since I'm purchasing something that draws cash down, it also notes that it's cash. It doesn't necessarily have to do that if it's implicit, but that is relevant and it decreases cash, so negative. Budgeted depreciation expense. Depreciation is not a cash item, so it should not be included in my calculations. I'm going to scratch that out, not including that. It is not relevant. It is not a cash item. Budgeted cash payments for salaries. That's typically something I have to pay in cash. If I pay it, it decreases cash, so negative. Other budgeted cash expenses. If it is an expense, it typically decreases cash, has a negative effect. It also says it's cash, so I can assume it's similar to a payment. It has a negative effect. So to calculate my prelim balance, I just want to take all of these and do as I've marked here. 20 plus 100, 120,000 minus 50 minus 45 minus 12. $13,000. So my preliminary balance of $13,000. I've got a beginning loan balance 32. I've got a minimum ending cash balance of 20,000. My prelim balance is less than the minimum. That means I do not have enough. So I will need to borrow. I will need an additional loan because I do not have enough. I need at least 20,000. I only have 13 of that. So I'm 7,000 short. I will need to take out a $7,000 additional loan. Additional loan means you need to borrow more money. I can't make a loan payment. You will either or neither borrow more via an additional loan or make a loan payment. You will never find yourself both taking out an additional loan and making a loan payment. If I don't have enough to even reach the minimum without borrowing more, I don't have any extra to make a loan payment. So I don't have any extra to make a payment. Even though I do owe money, I have a loan balance of 32,000. I don't have any extra money to pay on that. How much do I owe now? What is the ending loan balance? So I owed $32,000 initially. I borrowed $7,000 more. That would increase how much I owe. Minus, if I made a payment, it would decrease how much I owe. I paid $0, so minus 0. 32 plus 7 minus 0, 39,000. How much cash do I have? Or what's my ending cash balance? So, you should note, well, actually, we'll come back to that. So, ending cash balance, what did I have before? Before any of the loan activities, my preliminary balance was $13,000. It's preliminary to loan activity. So, I need to figure out how the loan activity, like additional loans or loan payments, would impact my balance. So, I initially had $13,000. I borrowed $7,000 more. If I borrow more cash, the bank gives me $7,000 more in cash. It increases how much cash I have in my cash balance. If I make a payment, if I pay on a loan, that would decrease how much cash I have. I didn't make a payment, it was $0, so minus 0. So 13,000, the preliminary balance adjusted for the loan activity, so plus any additional loan minus the loan payment. 13 plus 7 minus 0, 20,000. You might notice that number looks quite familiar. It is because that is the minimum cash balance. If I have an ending loan balance that is greater than 0, if I owe anything at all, my ending cash balance will have to equal the minimum balance, or the minimum cash balance, because I still owe money. If I had anything over the minimum, I would use the extra that I have to pay down that loan balance. So if I owe anything at all, any extra that I have goes to the loan. So if I owe anything, I will keep only the minimum. Anything excess goes to the loan balance. So if my ending loan balance is greater than 0, that means I will keep no more. If I owe anything greater than 0, ending loan balance greater than 0, I will keep no more than the minimum. I have to have the minimum, but I will keep not a dollar more. So as long as I owe anything, my ending cash balance will equal the minimum balance, which is 20,000. This is very similar to questions like I might ask you on the exam regarding the cash budget, where I make you do your preliminary cash balance calculations, where I ask you about what loan activities you have and what your ending loan or cash balances are. Okay, please let me know if you have any questions regarding any of this. And if you need to set up additional office hours, I know that I won't be in a lot. Obviously, today and tomorrow, I should be there some Thursday. If you need to discuss this, we should also cover some of this in Thursday's class. So make sure that you bring any questions that you have up in class if you would like to discuss them there. All right, thank y'all.